Hey, this is Sasha. Thanks for joining me in today's video. What I want to share with you today is a quick insight to our options membership and what it's all about. So this is a little clip put together, cut from different segments of the options membership class and session that we ran not too long ago. So again, it might be a day or so old, but I'll give you an insight on what the options membership is all about. Now, enjoy this clip. If you're interested in the options membership, go ahead and take a look at our website at tradersfly.com. You can go here and you can go to the membership section. That will link you up to our membership website. And once you're here, you can go ahead and take a look at the option ideas and strategies. And this is what it's all about. You'll get a sample clip right now, and you can also learn more insight right here. And there's also a couple of sample videos as well right there. Now, for watching this video, I will give you a little bonus and discount. And what you can do, I'll just show you right here. When you scroll down, if you're interested in signing up, you can type in the coupon code, share the love, do it all together, and you'll see apply the coupon code. It'll give you, I think it's 50% off the first month. So off the first month, you can get the first month half off, and then it'll renew. And if you're not interested, of course, you could just go ahead and cancel before that time is up. So that's a little bonus for those of you that are watching this video. Keep in mind, if you're watching this video 6 months later or a year later, the coupon code may not work. So understand that coupon codes do expire and they do change. And in that case, if it doesn't work, it doesn't work. So anyways, one other quick little bonus is remember that if you go to the Traders Fly website, go to the Getting Started page. There's also an Options Trading 101 for those of you completely brand new to options. Anyways, enjoy the clip. I think you'll get a lot out of it and seeing what our member section has to offer. So to kick things off, I'm going to do this one a little bit more speculative in a way. As you can see, what we've been doing with lows here, I mean, this stock's been doing well, but we're creating kind of lower highs. So as we continue to pull back, stock goes up and then pulls back. Stock goes up and then pulls back. So what I'm going to do is I'm going to still go ahead and do kind of a directional bet, assuming that this is going to pull back, and I'm going to get a little bit of the power of volatility behind it. So what I'm going to do is set up a little bit of a diagonal. However, if it doesn't go in my favor, that's why I'm going to do a little bit of a shorter duration trade. So this will be kind of a 14-day trade. So what we'll do is we'll go ahead and we'll buy a diagonal right here, and let's just float it right there so you can see. So think of this as like a vertical in a way, but it's not exactly a vertical. So here's our trade setup, basically that what we're doing. Now, if I want to go ahead and get a little bit closer, what you could do is just go in right here and have a little bit more powerful theta. So let's go about 5 contracts there. So the good thing about this is if it does continue to head higher, like why would I do it now? Because it's been going up the last few days, right? It's been going up the last week. So assuming it won't stretch as far, but even if it does continue to stretch, I've got that theta that'll continue to kick in. And that's the point of this trade. So setting something up like this, let's say about 10 contracts will cost me about $2,000. So it's a good way to kind of also hedge some of those other positions that you may have that are very bullish, and setting up a different trade that's a little bearish can sometimes help protect you. So I'm going to go ahead and pop this one on. You can see I'm doing it kind of a 7-day difference on the duration. And then the strikes, I'm doing it fairly tight. So basically I got a -74 delta. If you want to reduce that, just reduce your contract size. But then of course you have less theta, but that also means it won't hurt you as much as it continues against you. So it's just a matter of how you want to play it. If you want to really reduce it, but you want to protect this, what you could do is overlap it with a calendar and then go to, let's say, the 160, and now you've got a calendar, and now you've got something like this. You've got a couple of extra calendars there, okay, to slow down a little bit of that delta problem. So you got -23 or 24 delta versus -29. So that's kind of the difference. So you could see, hey, I could stack more there, but it's not necessary. The only reason you would do that is to kind of reduce the delta just slightly, to tweak it based on your needs, because the strikes are not there within this kind of position. Or you just go to 3 contracts to kind of slow those things down. So don't make the trade more complicated than it has to be. I'm going to go ahead and bump that one up to 5 contracts. I think it's fine for me. And I'll put that trade on. We'll see how things progress. As far as managing that trade, I would just say, hey, once it goes against you, right, going in your favor, there's nothing wrong. You just take 5 contracts, go to 3, pocket the rest, or wait for theta to kick in. But if it starts to go against you, what you could do is say, hey, I'm gonna make maybe $150 on this. So once it gets down to this break-even point, there's no reason to you could either just take it off, or once it's down maybe $70, $80, what you could do is slow it down by going to like 2 contracts anyway, take a little bit of a loss. There's not a lot of tweaking I would do on this position, and the reason for that is because there's just not a lot of contracts and strikes, and there's not a lot of days in the trade. It's only a 14-day trade. If you were doing maybe a little bit longer duration, there could be room for adjustments. Here, I would just kind of keep it simple. Could I go ahead and maybe stack another diagonal on top of it? Sure, but don't make it more complicated than it needs to be. So the other thing is, if you do this longer duration, let's just say maybe not a 14-day like I did here, but maybe like a 27-day, what you could do if it starts going against you is just a simple, let's just go out here. You could go in the same area where your long is, or even 25 plus days. Let's say I go to the 34-day duration, and I could just buy a single call and watch what that does. What that will do is slow me down. So if I go ahead and maybe get 2 of these at 170, so my loss for, let's just say, about $150 would be right here without it. But with the call, you could see I don't even hit that loss until later in time. So basically, if the price was a problem, you could do that. However, eventually it will catch up to you. So what you would do is, if it goes down to about $40, not $150, right? Because our max loss is around $150. So once you're about 30% of the way there, then you would do this, and then you'd be down $40, not 16 like it shows here. And then at least it slows you down on the curve. All right, so there you go. I hope you got some good insight to what the options ideas membership is really all about. Really looking at the current market conditions, different strategies and things you could do, and answer some of your questions, kind of like a little mini private Q&A in a way, or more intimate at least. So I hope you join us. Just go ahead and go to the Traders Fly website right there. You could go to the members section, and once you go to the members section, you'll be linked up to the page here. So thank you so much. When you're ready, go ahead and join us also on the newsletter list by clicking the link over here, or subscribe on YouTube if you're brand new as well. Thanks again, and I will see you next time, and hopefully in the options members section.